Hi, I'm Bruce Maples, publisher of Forward Kentucky, and today I'd like to go through an explainer on why inequality and oligarchs are threatening our democracy and why it's actually worse than you know. So we know about inequality. We see it all around us every day. We know it exists. We've been told for a long time that it's bad and that it's higher than it has been in a long time. In fact, many people say we are back to a gilded age, just like we were at the beginning of the 20th century. But how bad is that? Can we put some numbers on it, or can we really figure out how bad it is? So let's talk about a study that was done actually a few years ago. It's not necessarily current, but I think it gives us some ideas. So we're going to talk about income and wealth inequality in the United States and do an overview of this. So first of all, let's be sure we're clear on some things. Income inequality and wealth inequality are not the same. Income refers to the money coming into a household over a period of time, usually annually, includes all this stuff you see here. Wealth is the total value of assets a household owns minus its debts, which most people call net worth. The numbers do change over time, and it depends on who's measuring them as to what you see. But the problem is we should not say that the differences in the numbers should cause us to ignore the problem. No matter how you look at the numbers, it's still bad. So here is that study I was telling you about how bad wealth inequality is in the United States. So we begin with what Americans think the distribution of wealth or income is in the country, dividing the country into 5 sets of 20%, right? Take the entire population, put it in 5 sets of 20%, 20%, 20%, so on and so forth. So over to the right, you see the top 20%, and Americans think that that's how much of the wealth of the country they have. Then the second 20%, you see the middle 20% in green. Most Americans think that's how much the middle class, what they would call the middle class, has. And then the blue, light blue, is lower middle class, and the dark blue is what we would typically call poor. It's the bottom 20% of the entire population. Now, that's what they think it is. And then these people ask the people they were surveying, what do you think it should be? What do you think the ideal is? And you can see it's much different. They think the top 20% should have a lot less. The middle 20% should have more. The next to the bottom 20% should have more, and the poor should have more. It's much more equally distributed in what Americans think would be ideal compared to what they think the distribution is. But when this study was done, here's what the distribution actually was. The top 20% had that much of the wealth of the country. You can see that the middle 20% is way down there. They've got just a little bit. And then the bottom two groups, the bottom 40%, have so little that they barely show up on the chart. Now, that's how bad it was a few years ago. And in fact, you heard the people talk about the top 1%. Well, if we take that top 20% and we break out the top 1% of the entire population of the United States, this is how much of the wealth they have, just the top 1%. Okay, so that's bad. I mean, you look at that, but it's even worse now. Paul Krugman, who is a winner of the Nobel Prize in Economics, has lately been talking about a new class of uber wealthy individuals. Uber wealthy, more than the top 1%. He says that they make up about 1 in 500,000 individuals, or about 2 10,000ths of the population. Much less than 1%. 2 10,000ths. So in an America of roughly 338,000 people, only about 600 people would be in this group of the uber wealthy. Another economist says it's even less. He said that the uber wealthy make up about 16 families in the United States. Now, you're sitting here thinking, okay, who would those be? I'm not going to try and name them, but I bet you could come up with some names, beginning with Elon Musk, but not just Elon Musk. So the uber wealthy are 2/10,000ths of the population. These people have enormous influence on the economy and on politics. And we need to name that and talk about it. They can single-handedly sway an election. They can buy off an entire caucus of legislators and never miss it. They could spend literally $100 million in the Kentucky legislature donating and bribing people, and they would never even know it was gone. So I thought those numbers were pretty gruesome, but they're also big. They're hard to understand. So I wanted to break it down to a local example with numbers that are easier to grasp. So let's go ahead and make this local. Let's take the population of just Louisville and Lexington, which comes to about 1.1 million people. Imagine that we did a product or an industry, and each of those 1.1 million people produced $1,000 in profit. Not just in gross revenue, but in profit. Now, I realize the children aren't going to do that. I get that. This is just a hypothetical across 1.1 million people that we can sort of grasp the population of Louisville and Lexington. So, if each one of those people produced $1,000 in profit, it would obviously produce about $1.1 billion in profit. So in today's world, how would that profit be distributed across this 1.1 million people? So we're going to use some percentages from the Census Bureau of a few years ago. So we're going to split this up into segments of the population, but they're not going to be equal 20% like the other one was. We're going to say how many individuals are in each segment. What percentage of the wealth does that segment have? And therefore, based on all of that, how much of that $1,000 profit will come to each person? So let's start with what we would probably call the middle class, sort of a middle 40%. So 40% of the population of Louisville and Lexington would be about 449,000 people, right? They would make up 40% of the population, but they would get only 29% of the wealth. Well, this is the middle class. We assume the wealthy people are going to get a little bit more, so we get that. And so here they make about $713. They produced $1,000 and they get back $713. That's not too bad. Most people would say, well, that's pretty fair for the middle class. Well, let's go on up. So above them, we have to take the top 10%, like I showed you before, and we have to split them up because of these uber wealthy individuals. So let's take the next 9% above the 40%. Well, they make about 101,000 people out of this population, but that 9% of the people own 35% of the wealth. So what does that mean? Well, they're only 9% of the population, but 35% of the wealth means that they get each $3,800, $3,900. Now, again, you're sitting here thinking, well, okay, we understand that the wealthy people get a little bit more. Maybe we can deal with that. But remember, we're just now up to 40 and 9. There's still a ways to go. All right, so let's take the next. We're going to take the 1%. Everybody talks about the 1%. Well, we have to split the 1% up into more segments because of how amazing it gets at the very top. So here is less than 1%, 0.9% of the population of Louisville and Lexington. That comes to about 10,000 people. Now they have less than 1% of the population, but they have 16% of the wealth. Okay? Only less than 1% of the population, but 16% of the wealth. So what do each of those 10,000 people get? They get about $17,000. Now remember, they only produced 1,000. Okay? Then we go to the next split out group, less than 0.1%, because we still have to get to the very top. So this group right here is less than 0.1% of the population. It's only about 1,000 people out of our 1.1 million people. And yet they get 13% of the wealth. And there's only 1,000 of them. So you take 13% of that $1 billion and you split it up among just those 1,000 people, and they each get $130,000. Okay? Now, if you're looking at this chart, you're thinking, okay, that's great, but what's that bottom line? Well, the bottom row is the bottom 50%. This is half the population of Louisville and Lexington. Half the population. 50% of the population, that's about 562,000 people. How much of the wealth of Louisville and Lexington do you think the bottom 50% actually has? Well, guess what? 2.5%. That's how much the bottom 50% has of the wealth of these 1.1 million people, which means that they each get about $70 out of the 1,000 that they produced. Now, remember we talked about Krugman talking about the uber wealthy, this new group of wealthy people in the United States who are so far above everybody else that we have to split them out into their own group. Remember he said they were about 1 in 500,000 people? Well, if you're good at math, you realize that this top 2/10,000ths winds up being 2 people in Lexington and Louisville. Those 2 people own 5% of the wealth, which means that out of that $1.1 billion that we produced with all these people, they get $25 million each. Now, I want you to just sit and look at that chart for a little bit. I want you to think about that. I want you to think about what that means for the people at the very top, what it means for the so-called middle class, and what it means for the bottom half. All right, so why am I going over this? Well, it has certain impacts, and we're going to talk about why these impacts matter, not just for fairness, not just for the morals of it, but the direct impact that they have on democracy. So let's talk about what impacts that much financial inequality has on our country in increasing orders of seriousness. So as I go down this list, it's getting more and more serious. So first of all, it gives a misleading picture of economic conditions. We talk about the GDP. Well, yes, those people at the very top, they're rolling in it. Their gross domestic product is looking pretty good, and the stock market is looking pretty good. We keep hearing about the stock market hitting new highs. Well, guess what? That bottom 50% that only has 2.5% of the wealth, they don't care about the stock market. They don't care about the GDP. They're barely getting by, if they are getting by. And that middle 40% isn't doing much better. So talking about the overall wealth in some sort of average grossly misleads what our economic conditions really are. Second thing is oversized impact on elections. We all know this is true, but we don't realize how much it's true. So Citizens United and all the other Supreme Court rulings, just the recent one, which said that, that parties and candidates could coordinate and spend all this money, and PACs and super PACs and dark money and so on and so forth. We know that people with lots of money are spending lots of money on elections, and we can't see it, we don't know it, but we know that it's having an impact. The everyday candidates are trying to raise money by the $10 and $20 and $50 donations, and the uber wealthy people are buying up their candidates to the tune of $25,000, $30,000, $50,000. Do you think that they miss that much money when they're making $25 million off one business thing, like we pointed out? No. So they have oversized influence on elections, and they have oversized influence on policy. Do what your donors want. That's what everybody's going to have to do, rather than what your voters want or what is good for your district or the country. If somebody gave your campaign through dark money or however $50,000 and they come to you and say, I want you to vote for this thing, what are you going to do? You're going to vote for it unless you have a lot more spine than we're seeing in a lot of people in Congress. So here are some really serious impacts of that much financial inequality on our country. But it gets worse. Social unrest. People may not know the numbers that I'm putting out there, but they know something is wrong. They know that the world is not working the way it should for them. They do everything they're supposed to do. Maybe they go to college, they get a degree, and all they have is debt, and they can barely put gas in the car and groceries on the table. And they look around at these wealthy people and they go, something's wrong. And it causes social unrest. But the other thing it causes, and you may think I'm being a little bit hyperbolic here, is collapse of the democracy replaced by an authoritarian autocracy. Yes. Now, if you think those last two bullets are hyperbole, let's talk about some studies. So here's some quotes, direct quotes from various studies of this problem. Economic inequality is one of the strongest predictors of where and when democracy erodes. If you want to know when a democracy is in trouble, look at how much economic inequality there is in that democracy. It has been shown to depress trust in political institutions. You want to know why our voting numbers are down? Why people don't bother to go vote? Because they don't believe it matters. They believe, oh, it doesn't matter. Those wealthy people are going to get what they want, and I'm just trying to get by. And so I don't believe any of this works. I don't believe anybody in Congress works for me. Why does Congress and government in general have such a low approval rating? Because of income inequality. That's one of the reasons. And then when voters in the top income percentile disagree with those at the bottom, it's been shown that the policy outcomes favor the rich. The people in our legislatures do what the rich want and don't even pay attention to the preference of the poorer voters. So it affects all these things. But let's go on. When citizens perceive the system as unfair, they are less likely to engage in civic activities. We talk about trying to find that community. Well, they're like, no, it doesn't matter. It doesn't have anything to do with me. I'm going to keep my head down and try just to get by. And what happens is this decline in the level of participation leads to further alienation and disillusionment. And so it feeds on itself. People go, I'm not going to go deal with that. Well, who does? The wealthy, the people who have bought their candidates. They care, so they're going to go get more of their candidates that they can buy. And the everyday people become less and less engaged and have less and less influence. So in the late 20th century, the main threat to democracies was a coup. You have this picture of a coup of the military coming in, the junta coming in and kicking out the president or killing the president and taking over the country. That's not the problem today. The problem today is people who are elected democratically and then they start gathering power to themselves and undoing the democracy. And if that sounds familiar, that's exactly what's happening in the United States. This is what inequality can lead to, is everybody not caring. You talk to your neighbors and your friends, they may go, well, it's a shame. But a lot of them aren't following it. Ask them if they watch the news. Ask them if they follow what's going on in Washington. No, they're just trying to put gas in the car and groceries on the table. So that's what happens. You wind up with nobody looking out for democracy because they don't think it's going to matter. And especially the leaders who have their super wealthy friends. There's a reason that Vladimir Putin has been in place as long as he has, because he had the oligarchs to support him. He rubbed their back, they rubbed his back. Well, guess what? The same thing is happening now in the United States. We have the oligarchs who are rubbing Trump's back and doing what he wants, so then they get government contracts and so on and so forth. It causes the collapse of democracy. All right, so what can we do? There's no use of me talking about this unless we have some solutions. So the first is we need to go back to a significantly progressive tax policy. I just am floored. Well, actually, I'm not, because I expected it. But the Republicans in Frankfurt want to get rid of the income tax completely, but if they can't get rid of it, they want it to be the same for everybody. We used to have a progressive tax policy in Kentucky. The top tax rate was 6%, and the lowest tax rate, I think, was 2%, and now everybody's at 3.5%. Doesn't matter how much you make. Well, guess what? Back when we all think of the golden age of American democracy, which was the 50s and 60s, the top tax bracket was 90%. Now, do we have to go back to 90? Well, maybe not. But right now, the wealthy are paying less than you and me relative to their income. So we need to return to a significantly progressive tax policy. We need to have people pay higher tax rates as they become more wealthy. That's the fair thing to do, and we have to have lower or no taxes on the poor or lower middle class. Second thing is we need to overturn Citizens United. We've got to get rid of it, and we need to place limits on contributions. We can't have dark money running around $50,000 at a whack and achieve any kind of true democratic legislatures. So we need to do those things. Or we need to publicly fund campaigns and get rid of contributions completely. Or both, or all three. Those are real important things. We need to tighten the ethics rules and the financial reporting. We know that there are legislators who are getting money on the side. They're doing, various things to get money, and they don't have to report it. We've got all sorts of money sloshing through our government. So we need to tighten the ethics rules and the financial reporting. And along with that, we absolutely need to prevent legislators from buying and selling stocks. There's no reason that they should be able to do that because they have inside information. What do you think is going on right now with the Iran war? It's on, it's off, it's on, it's off. What is that? It's Trump manipulating the market so his friends can make killings, shorting stocks and then buying long. Go long, go short. It's all about that. It's all about the grift. We need to prevent legislators from buying and selling stocks. If they knew that they couldn't get rich from the stocks of these companies, maybe they'd pay more attention to what's good for their voters. And most importantly, we need to refuse to accept this much inequality as normal or good for our country and the world. We need to talk about it. We need to talk about it in campaigns. We need candidates who talk about it. We need candidates who talk about these things. We need to stand up and say, this is wrong, it is bad, it harms our country, and we need to do something about it. Now, if you've got questions or comments, leave them down below or send them to me if you wish, and I'll try to respond. And thank you so much for watching or for listening or for reading. Please like and share. And if you're not a member of Forward Kentucky, go to forwardky.com and become a member. Thanks.